Okay, so jumping into it, Monday, new week, 27th of November. Just going to start off with gold because obviously through Asia, that was the one. We got the big pump, took out those sort of previous monthly wick highs that we've been targeting last couple of weeks. I mean, this is what I say about gold. Like structurally, it when it trades well, not when it trades well, but structurally, from a technical standpoint, it does respect the charts very well. We can see this just as a couple of quick examples. This low measured move through this area here. Price targets that we got hit and took out last week. They clipped it off, market pushed it back down. We see on this big pop today, we had this sort of falling resistance, so a bit of a sort of triangle thing sort of setting up here. And really, once this let loose, this was massive. This was like a $20, $20 30-minute candle or so that this one sort of pumped out. So that was a very nice move. So obviously sort of got off a couple of sort of closed a couple of sort of long positions on that pop. But even as you see, the back test here is coming right in line with where we've got it marked out, and it's slowly still grinding up higher. So I don't think this is like done. I don't think that's a blow off top or anything for gold. I think we've definitely got some more sort of moves coming up. But I mean, if you just look at where it stopped, exactly where we'd marked it out, like, and this is the importance of being able to sort of read the charts and say, okay, based on sort of previous price action, if we jump onto the daily or so and say, previous price action, if it breaks level A, it's going to go to X, whatever. You know what I mean? And we can see this here, that it's just respected these same zones time and time again. Over here, sold back down. We said, look, if it pops through here, where's its next stop? It's up in this zone here, and it feeds right up into there, and it's sold down. As I said, look, it's still grinding up high. So these points aren't sort of like, the top be all end all, but in terms of actually trading, these are the sort of things that you need to know because you can't just sort of like it's different. It's not investing. And some people, they'll buy these things. Like I was, if you go back a couple of weeks on the videos, I did, called this break perfectly. And look, it just hasn't turned back since. But that's not how I trade. I'm in and out, like like a bandit, bang, in and out with the risk. But this is really just sort of been just continuing sort of providing. I mean, even this sort of pullback through here obviously came down a little bit deeper than sort of I had marked out, but it had that nice rolling top into the pullback for entries, and bang, here we go for a second leg here. And obviously this is starting to really pick up some speed coming through here. And this is what was said though as well, because like, it's just okay from a technical standpoint, it's trading very well. But we said, look, once US dollar starts to unwind, that money has to go somewhere. And, US dollar and gold had been running somewhat in tandem, not completely in tandem because gold had been sort of pushing up, but we hadn't been seeing the equal move of US dollar moving down. That was due to the sort of Middle East situation. Now we're sort of seeing that the US dollar is finally coming off. The Middle East situation's kind of sort of dropped out a little bit. You know what I mean? Like the economy is very much looking, well, the economy, I should say, equity markets at least, are very much looking like they're positive and risk on. These sort of things both together mean, okay, you've got 3 months of gains on US dollar, time to book it, try to move that money somewhere else. And, you'd had gold. It was at the polar opposite. It was right down the end of it all. And it's just continued to appreciate the whole way through. Obviously, a nice, pretty deep sort of little pullback here, but coming back through and currently sort of pushing up through these highs here at the moment. So I think certainly, the big thing for gold now is to hold these levels into a monthly close. I've said it a number of times. I think on the other chart, I'll sort of clean up a few of these charts a bit more, but certainly easier now that I'm back on sort of the main setup. But if we flip across and go on to a monthly look, you can see how high. I mean, like this is sort of going back to 2020, but never. I mean, 1975 to close that month there. We had sort of 1936 with a very big wick up to the top here, March 22, and then obviously sort of earlier this year, just back in May. It was just back in May, was it? Yeah, it feels longer ago, longer than that. But again, it was unable to sort of close past this level. It was a hot topic talked about. It set a new sort of monthly high close. But I think people are really looking for that 2000 level. You get that 2000 level, and it's really going to start to pick up speed. But we can see certainly here, like it's just in terms of how the candles form, it's very well done because it sold down early, it grabbed a whole bunch of liquidity, it pushed back up. And if you look at a couple of my posts, or obviously the videos, we've got the points where I said, like when we were down here around these 1942, I said these are the levels you need to look for. And one of them being that sort of, the flip of the monthly candle, which was the 83. At the time, the current month that we're in now's wick high was 2004. And then we've come up here, and I said the third one to really sort of target was this wick high. And even if you have a look back on the videos from yesterday, I said, look, this is the target, this is where we're going. And, it went there. It went there and sort of like, it targeted because people know, okay, that's where the textbook stops are going to be. And that's what got such a fast move. So if we flip onto a lower time frame, you can see the pace of this as it sort of came up through these areas. Where are we? This one here. I disregard this little candle here because I think this is just this particular feeds stuff. So I think this was open this morning, but you can see it was moving up, and it just once it took out 2000, what was it, 2011, I think we called it, and it just went bang straight up into these zones. And again, this is where we've got the zones marked out, and we know sellers have been in this area before, and here they are again. So, it's coming up. It's still grinding higher. So, yeah, it'd be interesting to see where this goes through here. This doesn't look like a strong sort of continuation move. Like, I don't think we're just going to continue then take out this high and go up to the 50s now. But, as I said a couple of times, we mark this point out. Yeah, make it a solid line. Something that stands out a bit more. Yellow, make it a fat one. There we go. That's the high. Once we break and take out this high, that's continuation, higher high, next move up. So, there's certainly some nice sort of targets up above here. We are, 27th now, and, that's 1, 2, 3 trading days left of the month. So, you really want to see it sort of hold these gains, hold this area that we've seen as being support. Support's been resistance, resistance. It's acting a little bit support-ish here. We just really want to see it hold this zone here, which is, as well the same, our 2000 line. And this, you can see here, this is the perfect example of what we sort of were planning last time when we thought it might have sort of come through, was the sort of pop up into this zone, the pull back down here, go here to take out this high, and then we look for the next leg up. And we go, okay, where's the next target? And above 2018, or so the high that we put in today, and a solid move there, not just another wick and then sell straight back down. And then you're really sort of looking more just ranging, but a solid close 4 hour above 2018, 2020. And that could be enough to sort of call confirmation, and you could it won't necessarily fly up because this is a well-known, the 2011, 10, wherever the last month's wick high was, that's a known area that people are going to be putting their stops. They targeted it, they hit it, and that's why you saw that sort of just capitulation, like fast move that just bang shot up. Up through this area, I think we've already done stops for this area. So we may see, if we do see a sort of a takeout of this level here, the 2020, a move a bit more of a grind back and forth up towards this next one. But the next target then, it's just another 10, 15 buck move, but, 2034, 2035, so on and so on. So, no, very great start for metals for the start of the week. We, called that one very well, and, it's been a nice sort of kick off for the start of the week. Just flip across to Aussie because this is the other trade that we've been sort of hammering through, and it's just been testing and pushing at this zone. Like you can see here, it's getting onto a higher time frame, but this is the area that we've been targeting for quite some time. Because again, if we chuck it onto the dailies, we can see, support, 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 resistance, resistance. We're right up in this now. You know what I mean? This is a perfect example of what I was just talking about with gold. You got your breakout, comes back, retest, and pushes on forward. Obviously, this one had a little bit of an extra wick earlier than the price action direction that I sort of called for at all, but it is playing out. It's up, and now it's just grinding up and pushing up through here. So had a little bit of a stuffer. It had a move early this morning where it sort of almost teased that go to get into that 90s area again. As I've sort of marked out a couple of times, or quite a few times, the 90s are very much a swing point. Every cent that you come to with the Aussie, it always seems to be support resistance kind of thing, and it takes a couple of times to really sort of punch through there. But as you can see, went through there this time, and now if it can close around the top side here, it's a good case for a bit more of a continuation. Just above, we do have this little measured move sort of price target set out, this sort of 66. 28, 66, 30-ish kind of area. This is based on the premise that this was a bit of a sort of cup and handle break. Where are we here? This sort of area through here. It's a bit pointy, but more or less the same. Put in a high, came back down, sort of went along, made a little base up and down. Look, there's so many different ways that you can chart these things. I mean, and they kind of all give the same answer sometimes, because if you look at this little move here, this is a bit of a flag. You know what I mean? And there's your breakout, your measured move. That also comes up around the same area here. But realistically, the side of this cup and handle, it's just the pole of the flag, and the flag is the handle of the cup. So it's the same thing. It just depends how you want to sort of chop it up. But certainly, I think that's the first sort of little price target once we get above this area here. What I'm looking for is above this 2015. These wicks over here. I'm imagining that we're probably going to get some. If we put it onto a daily, we can see these were some big area sell downs. I mean, look at this one here where I remember trading this and thinking like, oh, here we go, double bottom, boom, we're going up. I thought it was going to be the same price action of, where was it? I think back in May, June, this bit here. I remember I was in Dubai getting long on this, and I got long sort of, I think, around this point here, and I had a bit of weight on it. And, I was like, we're gone. And then I'm like, oh, geez, and it's dropping down here. And, I had to get on the plane sort of coming back from Dubai, and that was not too fun without any Wi-Fi or anything. But obviously we could see this subsequent move after that, so that really worked out very well. But I thought we were moving into that same sort of pattern, same sort of price action repeated here, where it was down, pushed back up, and then all of a sudden we had this one, because you got to think this was a big bullish candle at one stage. And, if we look at this, this is, where we go, through here, that's an 87-point top wick, not even the whole sort of, daily candle, but that's a big liquidity grab. And that was sort of like really sort of like, okay, somebody's really wanting to sell this, or somebody, it's a part of the market. But point being is that around these areas, we know that this has been a very strong support, resistance, and that last final nail in the coffin resistance of this sort of last real drop down here before we went into grind mode. Assuming, I'm banking on there being some tasty stops above that. So similar to the price action that we had with gold, above that last month's previous week. I'm thinking that, if I was sort of really sort of trying to hammer these things, this is where I'd be putting my textbook stop. Not where I'd put my stop, but where a lot of people would be putting their stops, because that's what the textbook says. So that's why we call them textbook stops. So that obviously, if you're shorting this thing, surely nobody, oh no, not surely, but there would be people that have been short and had it all the way down here and just given it all back, possibly. But again, you got anybody that's tried to short it here and thought, look, I'll put what are we at, 65.40 here, I'll put 100-point sort of, 80-point stop on it, kind of thing, just over 1%, 1.2% or something stop on it, which is still quite a chunky stop. But, if you're really sort of thinking that you're going sub 62, maybe 80 points isn't too bad, because the reward to that's at least sort of like, 3-4 to 1. But the point being is, if you get above these wicks, I'd imagine there's going to be some stops here. And as we hit these stops, that's going to really add to the buying pressure, because it's just going to go and it's going to push up. As to how high this goes, it's hard to really sort of say, because it's not a sort of, I guess it is a pretty sort of super main level, because we can see this is the bottom of that double top that we had back in July, which really put in that last top that we had, which made the big breakout line. So, you know what I mean? There's, yeah, I reckon we might get a little bit of a push around here. Maybe sort of, 15, 20 points. Again, it really sort of at the mercy of what happens with the US dollar. DXY still got some downside to go with this most current sort of bear flag that it's still playing out, which is trying to sort of bounce out of. But, it's holding it roughly at the moment. But, again, if that starts to catch a little bit of a bid and get a bit of a bounce, then we're going to see the moves come back down. So, again, I've still got some longs going here. If I can get to these sort of 66.30s, I'll be sort of taking a couple off the table there because I think that's going to be a little bit of a short-term area where we could be looking for a little bit of a cool down. If we get this push back up, we can see again with the RSI over here, it's hit into these zones a couple of times, and this has been the sort of turning points for it all. So, you know what I mean? It can obviously sort of still push up higher, but there's also previous action along here, as you can see, that around this zone is when it's decided to sort of start to sort of cool off and pull back a little bit more. So this means that potentially, if we do get this push up here, maybe they test for the stops, maybe they run it up there, get the stops out, and then they really cool it off a little bit more, and we get a bit of a push back down, sort of sub 60, sub 66, maybe test that 65.90 area to see if now, after being such a heavy sort of resistance, it can be a bit of a support again for us. And that's the thing. I mean, regardless of where it goes to when it breaks out the top here, it's going to sort of push up. It could go here, could go here, could go here, whatever. It's going to come back. We're going to see a test of this resistance. Again, you want to see this areas come back into support, come back into play. And even if you want to go all the way up here, you want to see that get touched. You want to see it be held. You want to see it come through here, and you want to break that breakout candle. So again, it's the same sort of thing. It's the same price action. Every time frame you're on, every asset that you're trading, this is how price structure works. It doesn't change, but some things are more sort of temperamental, of course, but the general idea is still the same. And just like we got the little breakout here, back for a back test and then a push on, that's what we'll be looking for up around here. So, this could go, and this is just an example of levels. As I said, 66.30 I think might be an area where we might see a bit of a pushback, but of course things can overshoot. And say it goes to 66.50, all the better. As I said, come back here, try and scoop up some more, wait for a little bit of a sort of bounce, a little bit of a lower time frame, drill down onto those 4 hours, 1 hours, find a little bit of a sort of multiple tests of support, multiple rejections from going lower, put your buys above the little breakout section there and jump back on to catch up this next wave to sort of come through there. But certainly, I mean, Aussie, just since it broke from this wedge, it's just been such a great trade. I mean, obviously it's had these little breakout bits here. As I mentioned with this one at the time, this is 61%, came here, clipped it, bang. Next one, move here, 61%, bang, came through. But now we're sort of getting a bit of a grind. But I wouldn't be surprised if we do have a little bit more upside here, 30 points, 25 points or so, and then a little bit more, maybe a little bit of cooling off. I mean, all the better. I mean, look, I'm very much sort of from the 63 area long from Aussie. So, I am looking to push up higher, but, I'm realistic with these things that unless you have a sort of big news catalyst, you're not going to get the big sort of rocket candles kind of thing. It's going to be more of this sort of daily grind sort of stuff coming through here. So we do have some Aussie news coming out soon. Obviously, China news, that stuff's going to affect it as well. But that's it's kind of where we're at the moment. I think certainly looking good, but I wouldn't be surprised if we get a bit of a cool off on that in the next day or two. Flip across to DXY because it is still chugging down. If I get down onto the lower time frame, this is the bear flag that I was talking about before for our short-term price target, just down underneath sort of 103 here. This is the flag, the pole from, I think it was CPI, that nice consolidation, bang, ground. And it's following, and this is the thing, and this is what I was saying, came down here. There's a known area of support. We thought, okay, around this area, given these previous areas that we'd marked out and isolated and sort of identified, we said, look, buyers, sellers, they've liked this area, whether they're buying it, selling it, resistance, support. If it's happened in the past, there's a high chance it'll happen again, at least for the first time it comes down. And it did. It came up here, bounced up, get the little retest there, and now we're coming back down here through again. So, I mean, certainly it's under pressure, and there's not really a lot of sort of like fundamental reasons just to sort of, on the dime say, hey, look, you know what, let's buy it now. Except for the fact that, where are we at here? If you sort of drag this out, the only thing really you can say that, look, you know what, 3.5% cheaper than it was, a month ago, start of the month. Geez, 3 weeks ago. That sort of shows how fast it's been hammering down. So, there's that kind of sort of thing. I mean, obviously, it's starting to sort of, the drops aren't as dramatic, but these are the things that I'm saying. You need to get these big they rocket down, I suppose, whatever you'd call it, if it's moving down. But the big solid long candles, these ones, they're news-driven events. And that's what you need to get the big rockets. If you're not getting the rockets, you're getting this. It is grind, sort of coming through. So, we're at this point here where we're sort of testing, are we going to get a double bottom? There's a high chance. We know that this area, the buyers have at least been in the past have been there. We know very recently, like last week, they've been there. So there's a good chance again. We're pretty heavily oversold. There's another sort of reason why we might get a little bit of a bounce here. But as I said, I wouldn't be surprised if a little bit of a quick move down over the next day. Take out this price target or at least this lower level of support, and then maybe a bit of a shoot back up, and then we sort of play around this area down here for a little while. But yeah, as I said, apart from the sort of fact that you got very heavily oversold, double bottom potential into a sort of high time frame support, they're the kind of key factors from a technical standpoint to sort of say that, hey, look, you know what, that could be a reason that maybe people want to buy US dollar around here. 3.5% cheaper than it was 3 weeks ago. Give it a shot. It's a better risk to reward than you did have. But at the same time, it's very heavily under pressure, because obviously you can just see even these rallies are just not. This is a bit of a push up here, but just as quickly as it came up, bang, bang, push back down. So a little bit under pressure there. But again, coming into the end of the month, people are sort of saying there's going to be more USD selling. If gold does get that close above 2,000, that's going to spark a lot of interest. And again, they typically 90% of the time they like to run inverse to each other. So that's a good idea to sort of say that we haven't sort of reached a bottom on US dollar as of yet. But yeah, I wouldn't be surprised again if we get a little bit of a push down and then a bit of a rally up. And again, look, if you think about it, how I just sort of was talking about the Aussie, it's the same sort of thing. Aussie, I think you might get a little bit of a push and then a little bit of a pullback. That would line up. I know Aussie's not part of DXY, but US dollar is a broad sense. That's a good reasoning for this kind of thing to be happening as well, as it sort of flows in line with it all. And quickly, I'll just sort of flip across. I'll do China. China's not really doing much. It's come down. It's hit that second price target where we, again, identified. Here's the buyers, the buyers, the buyers. This shows how sort of, ahead of the time. Well, not really ahead of the time, but presumptuous, I think, is a better word for it. Expected buyers. Again, these aren't sort of time levels. These are price levels. And this is why we had expected buyers at this level. I'll put it across here, expected buyers, and here they are coming into the party, pushing it up. So, this is a very strong sort of known sort of support area. So it's not a surprise that we are getting a bit of a move up here. We can maybe draw a couple of little lines on this here, but certainly after such a strong move, it needs a little bit of a sort of reprieve. So it's not like really a sort of bit of a shock that we're sort of getting a bit of a pushback up here. But as you can see, these pushes they're no V-shaped recoveries. It's just going up, and then people are going, wow, here's a chance for me to actually get out at a better price, or maybe add to their shorts, and they're hammering it down. And we're starting to get a little bit of this sort of flag move through here. Similar to sort of this move that we had down here, back up here, sorry. So if we sort of drag this one through here, I think we're a bit early on this move here, but this could potentially be just the next leg down. And if particularly, as I said, if we break this this level here, I think that's pretty much a good idea. I think we identified in the other video that we had about another 1%, 1.3% was said down here to this next sort of 705 odd zone. And if we sort of drag this out, this will take us a little bit further because it's a little bit longer. but it is into that kind of area, and this looks like it's lining up with one of the fibs, which will be the 50%. And then again, these are just the things when we get a couple of different potential indicators pointing to different levels. That's when you start to think, well, maybe one section of the market's thinking this, another section of the market's thinking this as well. There's a higher chance that we do see things play out there. But really, as we've got this alert set up here, that's where we've got weekly supports. Obviously, weekly are a lot stronger. The higher the time frame, the stronger they are. And as they break, the more significant they are as well. So that really could be opening it up for another big sort of leg down. But really, you can see this, and this is what I mean, where it's not DXY with China with one, but it's broad sense US dollar selling. So you'll see it on all the crosses. It's not just the the euro and the cable that you're sort of seeing these things happening. Obviously, there's the other ones as well, with the yen and the Canadian and all that. But you know, it's across the board. Everyone's kind of getting out of US dollar just because it's been running for 3 months. There's a lot of profit there. There's other things that have been beaten down. It's just the cycles of the market. Why would you sort of continually push something where the risk rewards are not so great as something else where you can buy something else that's been cheaper, let that appreciate a bit before you then, if you really want to get into US dollar, give it a couple of weeks. I mean, we've seen how fast it's come down. If it could continue going down, you're going to have it even cheaper in 3 weeks' time. So yeah, that certainly seems to be the market sort of saying that they're kind of done with the risk off at the moment. They're pumping into equities, and the risk on assets like the Aussie as well is certainly appreciating from that. Finally, with copper. Not a great deal to report as for the start of the week. It gave up this sort of little rising support, but that's not real. I mean, it's very choppy up around here. These areas that we did sort of pick out, look, if we sort of said that, look, this was the main channel through here, little overshoot down here, came up the top here, and bang, came down. And again, confluence here of this sort of rising support of this channel, plus this sort of horizontal here, which I think if we tip onto, was it the weekly or the dailies? The daily body fill was the one there, and it's really it's saw that little sort of shoot off, but again, identify the zones of where the buyers might want to step back in, and then pretty much on cue. Obviously went down a little bit further, but it's just consolidating the zone here at the moment, giving the RSI a bit of a much needed sort of cool off. But if we sort of drag this up, let's make this just zone here. That's just your little consolidation area here. I mean, it's certainly not really sort of giving up. We've got a little bit of a negative divergence, but not enough for me to really sort of say, hey, we've got a top going on here. I think people just need to respect the fact that it came through this falling resistance, and after the back test, took out that breakout candle, and bang, away it went. And this is what I mean. It's on the same every sort of asset that you trade. This is charting, and this is how these sort of the price action sort of works together. So you just got to be able to identify those areas and know where to add, where to sort of take off, where to sort of book some profit, and these kind of bits and pieces. But yep, that's pretty much it from me.